Good afternoon. How are we all doing? Afternoon, Ian, Mumo, Evil, Steve, Crum, Monkey, Peter, Amy, Kenley, Michael, Chucks, Fletch, Evans, Neo, Gerard, and Ross Wither. Hello, how are we doing? Right. Wednesday, big day today. Lots of stuff going on. Afternoon, Virginia. So, yeah, we've got loads and loads of stuff today. So we'll stream for CPI. Have a look through all the FX pairs, have a look at the New Zealand dollar, see what's been going on there. 245 is the Canadian rate and press conference today. There's no forecast for that to change, so we're not expecting any movement on the CAD rate. It's virtually impossible for them to move that ahead of the US dollar. Just won't do it. Nothing happened this morning with New Zealand dollar. Rate stayed the same, and as I suspected, we've basically got the opposite to what we got from the previous rate. So we're on our way back down or back up on the New Zealand dollar. So we'll have a look at that in a minute as well. This evening, we've got FOMC to look forward to as well. So it's a big day today, news-wise. There's a lot of volatility already in the markets. Obviously, Aussie, New Zealand, as you can see on the screen here, I've annoyingly got out of half of my position too early, but that's because I put the new EA on and I had trades running still with the old EA. So the new EA's closed it out because I've hit target. So I've got to put those positions back on again. I've scattered a few positions on, one there, and one down here. So I've just entered another short there, and if it pushes up, I'll get in again here, and if it pushes down, I'll get in again there. Basically looking for this Aussie New Zealand to return to origin, because this was not the right move for a rate stick. So I'm anticipating at least getting back to here, if not all the way back down to there. So we'll see. We'll see what happens there. Afternoon, Mark, Brian. So Aussie dollar, New Zealand dollar, we've got 150 ADR on that today. So New Zealand dollar did not change their rates as expected this morning. If we look at the rate statement, as soon as I see anything from the Bank of Japan, I'm like, what was that? I'm just waiting to see what they do. And if there's any more on the Japanese this morning, there's not. So if we have a look at the RBNZ stuff this morning, there was nothing at all of impact in there whatsoever. So the rate came out at 5.5. We had the rate statement basically, and there was nothing in there that gives any indication as to forward guidance at all. No changes in interest rates forecast, nothing planned. It's all going to be data driven, the usual stuff. So there's nothing to read into the New Zealand dollar, positive or negative. And we'll just have to wait and see what happens, basically, with that one. But there's no reason for that move that we got from all the way back down there. Go even further out to find it. Ages ago. Last rate change. Well, last non-rate change, 5.5. So, yeah. I expect us now this market structure to hold up here and us to start that descent and undo a portion of that move. So you want to look at where the potential is for this move to go to. That's your 50% retracement. We've got a 38 and a 61. So somewhere in that region, if it is going to continue on a bullish, guys, is where you would look for a pullback to appear. So I've made about 2% profit on that. 1.5% profit on that move there. So if we can get back down to there and I get break even on the rest of it, which is all these old orphaned positions back down here, I'll just get out of those at a break even. But we'll see. So Aussie New Zealand's ADR today, Euro New Zealand is an ADR today. Again, it's all New Zealand dollar, 100%. Good chance that this might pull back from here, but obviously I would anticipate that now. A little bit of strength coming through in the New Zealand dollar. And New Zealand, same story. So a couple of weekly range hits, New Zealand dollar Swiss pumping and New Zealand dollar yen pumping. So obviously New Zealand dollar rallying up, and we've got a weekly hit on those as well. So a couple of opportunities there, but I'd be a little bit less inclined to take those with this New Zealand dollar move. David, thanks for the $5. Very much appreciated. You are becoming my sole beneficiary on YouTube for the tips. Thank you very much. Don't be a bumb. You put bumb. Don't be a bumb. Hit that thumb. That's what he meant to say. Yeah, thank you very much for that. Very much appreciated. Good afternoon, Goat. Interesting. PTEA took over trades taken by MRAEA. No, it didn't. That's the problem. All these positions here. So that one. No, sorry, not that one. That one, and that one were taken with the position trader EA. So I took that as a manual with the sell button because I wanted to add another position in, and it ground up. So the position trader EA took over and obviously scaled in for me, and it went, hey, we just made 1%. Grab it. So it did. What I didn't want to do was actually shut that out, but I just didn't even think. I completely forgot it's got a profit target set on it, so it's just bank the money, which isn't what I wanted. But it doesn't matter too much. So I've manually put an order in here. So I've got 2.27 lots. I should have 3.27 now. So I have 2.27 lots short on the Aussie New Zealand, which is all these old orphaned positions down here. So there's 4 positions. I've done drawdown control, so I've taken one of those positions off using that profit. So I've done some drawdown control on it. I could do a little bit more actually, but I'm going to wait and see what happens with the US dollar news in 5 minutes. So basically, what I've done is I've put 3 positions here, 1 continuation in case this thing just accumulates and then drops. 1 up here in case it pulls back, double tops and drops, and then I've got 1 down here in case it accumulates and drops. So I've added 1. I'm going to add a second if it pulls back, and I'm going to add a second if it pushes. If it pulls back and pushes, I'm going to have all 3 of those. My average will jump up to here, and I'll be out in tomorrow, basically, or day after, whatever. But we'll see. But this is an old orphaned position from when I was running the market reverse alert CA. So, right. So those are your ADRs this morning. There's a few there to look at, but they're all New Zealand and Aussie related. Pound odds just hit, I think. Yeah, literally, pound odd has just hit. Australian dollar weakening by the looks of things a little bit. Yeah, a little bit of weakness coming through on the Aussie, which is nice because I've got Aussie New Zealand short. So CPI comes out in under 3 minutes. So what I'm going to do is I'm just going to open the US dollar yen over here, just so we can keep an eye on the US dollar yen, because obviously we're interested in that 152 high. So we'll keep an eye on the US dollar yen, because if we get a positive CPI number come out, we're going to potentially get a rally on the US dollar. If the US dollar rallies and we go above that level, we obviously know what is potentially coming from Japan, and Japan will be watching very closely what happens with this CPI number. So we'll watch that, and we'll watch the Euro US as well. What's my US exposure? Short. So I'm looking for short numbers basically myself. So obviously we've got a forecast of a drop in inflation. So the core to drop month on month, and main CPI to drop month on month. However, the yearly figure to rise. So if we get as expected on these, if we get that 0.3, that means inflation's going in the right direction, which confirms the likelihood of that June rate drop happening, which will be slightly bearish for the US dollar. If we get anything lower than a 3.4 on the annual, again, that should be bearish for the US dollar. If we get forecast figures, I suspect we'll just get a whipsaw, but we'll see. But if we do get positive numbers, i.e. if this is a miss, if this 0.4 doesn't turn into a 0.3 and we get a 0.4 or even worse, a 0.5, that's going to mean that June interest rate drop is going to be pushed back, potentially, which obviously would be very bullish for the US dollar. So we'll see what happens, but we've got less than a minute to go on that. So we'll watch that, see where we go. And then obviously this afternoon, we've got the Canadian rate. I wouldn't expect an awful lot of movement off of that necessarily, but we have got the BOC press conference and they will be reacting to what happens with this CPI number, because what they do will be very closely mimicked on the back of what the US do. And these numbers are going to determine what the US is going to do in June. So we have got a lot more movement potentially this afternoon as well, but we'll wait and see. So we might as well just watch the hourly charts because we're expecting a big move. I messed that all up. Yeah, that's all right. Only spelling. You have to be good with numbers, not spelling. Afternoon, Reverend. Are you short against the dollar? I am. So that's bullish US. Right, there we go. So we are well above the US dollar yen is well above the 152. So pound odd 125 ADR. Cool, that's a big number. 3.5. It's even bigger than anticipated year on year. Right, we need to watch this US dollar yen. The Japanese are not going to be happy about this at all. So this is a big miss on inflation, flat out. Okay, so we got 0.4. So inflation is not coming down in the US, which potentially pushes that June interest rate back to July stroke August, which means another month of continued sideways movement. No clue what we should be doing with the US dollar. So we'll see if the market reacts to this, and specifically we'll see if the Japanese react to this, because that's gone totally the wrong way for the Japanese. So this is now all-time highs on the US dollar yen. New Zealand dollar, US dollar 125. So everything will be coming down against the US dollar. So was it 56? Oh, frozen terminal. So that is roughly 10 ADR. That's not. It's a daily chart. Yeah, sorry. That's roughly 10 ADR. So if the Japanese go, right, we've had enough, and they press that button, that is your target short. However, we still don't know. Let's keep my eyes peeled on this financial juice. In fact, I might actually stick it up on Discord over here. Got that there, and I can keep an eye on it. So yeah, so inflation figure basically for the US dollar is a 3.2. It went up unexpectedly last month. It's now gone up again unexpectedly. So as you can see, every other country out there, their inflation change is dropping, apart from the Japanese, which we don't need to worry about because they've just changed their interest rates. But every other country is dropping quite substantially with inflation. We had the first bounce from the US dollar last month, and now we've had another bounce, which means basically instead of getting that, we're getting that, which is not good, which puts pressure on that not to come down, which makes the US bullish. So we will see, though, what happens. So 150 ADR, Euro US. The Canadian dollar will probably be moving as well. Not much, actually. So very little movement on the Canadian. So this is all US at the minute. So there's two scenarios that can play out here. One, the Japanese intervene, which means they will liquidate a load of their US dollar assets and pump the yen, in which case then this will unravel almost instantly. And obviously that will be through the floor. Or they sit and let this fester and nothing happens. So we'll have to wait and see. But this is the exact opposite of what the Japanese have wanted and have been talking about. Aussie dollar yen coming down hard. This is the Aussie dollar collapsing off the back of that news as well. New Zealand dollar's weakening as well. Loaded weakness just coming on the New Zealand dollar. Very odd reaction. Everything is powering up. The yen's powering up at the moment, look, across the board. So the yen is getting stronger everywhere, apart from this US. So they're putting the brakes on this. So the Japanese, as you can see, they're already pumping the yen, which has put the brakes on the US dollar yen. That's why we're not moving, because we've got a massive rally going on the US dollar, and we've got a massive rally going on at the yen at the same time, which stops that dead in its tracks. So we'll see what happens. Traders bet against June start to Fed rate cuts after inflation report. Now sees a later start more likely. So basically, as I said, now looking not necessarily June for that drop, more like July, maybe August. So there's potential for not so much strength in the US dollar, but not weakness. So what we're waiting for is an opportunity to go short and stay short on the US. They're not giving us, well, they're not giving us that. The inflation figures are not giving us that, so we're stuck. So let's see if this holds. Seeing if there's money piling into the Swissy as well. There's not a lot happening on the Swiss franc, so it's not a safe haven run. Little bit of money coming in the Swiss, but not much. New Zealand dollar CAD ADR. Approaching 175 ADR for the Euro US now. Still trying to push higher on that US dollar yen. Look, very big, strong move this is on the US. Uh, 80 basis point cuts on ECB now from 87. So again, the euro will probably be strengthening a little bit. Bit difficult to tell. Everything's moving at the moment. But the traders are banking on 80 basis point cuts on the ECB now, not 87. So as that US dollar gets pushed back further, it pushes back the ECB, because we're all waiting for the US to move first. After the US has moved, then you'll find the pound, the euro, everybody else will start to drop alongside it, as long as their inflation figures are either stable or dropping. So the ECB now potentially less likely to cut in June as well. Basically, all the outcome of this is it makes everything ever so slightly more bullish than it was. So no real advantage to any currency. It's just we've got no indication of that US dollar date again, which doesn't help us. It means there's potential for more sideways for longer, which isn't fun. But anyway. Afternoon, Rico, Gav. Safe to add more positions? To what? What do you think of the NAS? Don't know. The NASDAQ will be dropping, yeah, because US dollar's pumping. So all the indices will come down. Indices do the opposite to their base currency, and all indexes are base currency in US dollar. So as US dollar rallies, indices will drop. As the US dollar drops, indices will rally. US dollar Swiss going the wrong way? Yeah. So US dollar Swiss, we're up at resistance here. So don't forget, this is a news spike. Yeah. This isn't bullish US. This is not bearish US. They are still going to drop the interest rates. Yeah. They're just not going to necessarily do it in June, but we'll wait and see what FOMC says later. Yeah. So don't forget, the main news this evening is going to be the FOMC meeting minutes. So don't forget, they will know this already. In here, we'll be taking that into account. So this evening at 7 o'clock, the FOMC meeting minutes will tell us whether or not they think there's a good chance that that June rate will be knocked back to July. If they come out in the FOMC meeting minutes and say, we haven't got the downtick, but it's 0.1%, it's not far off where we thought we were going to be, we just haven't come down yet. But that June rate change is probably still on the cards. That massive spike you've just seen will be completely undone at 7 o'clock this evening. So don't necessarily read into this. That's going to be a sustained move. It could all be undone later. Don't forget, we've got two other major news events this afternoon as well. Sorry, well, including FOMC. We've got the CAD monetary policy and FOMC. If the CAD come out and say something big in here, which is regardless of what's just happened with the CPI figures there, we're still going to be dropping our interest rates in June. There will be a load of money piling into the Canadian dollar, or rather piling out of the Canadian dollar. Where's that going to go? Somewhere else. Yeah, so there could be another movement this afternoon off the back of this as well. So we'll have to wait and see what happens. But so, yeah, big, strong move on that one. But that Japanese yen not going anywhere. We're stuck there. So we'll see what happens. I'm waiting for the BOJ to say something. They haven't said anything. Annoyingly. Aussie dollar, New Zealand dollar also undoing its good work from this morning. Yeah, that's fine. I don't mind that. So I've got another position going on here. I've got a sell limit set in the propulsion gap just under the high of the day. So not under the high of the day. So we basically pulled back down. There we go. Just breaking new ground on US dollar yen. So obviously we've got the news this morning. We piled down, made a propulsion gap. We tested that propulsion gap. That's where I entered that additional, where I put that pending order. So basically, if we come back up and retest this area here again, I will look for that to become resistance, basically. So for this move on the New Zealand dollar to hold and add back in. Yeah, they added back in there. If it gets back up to there, I expect them to add back in again. But it's got to get there. It may not even get there. Market structure, obviously, at the moment is that. So we could well just come here and drop from there. Let's see. Oh, this is interesting. This is uncharted territory. We've never been here before. So US dollar yen all-time highs. And the Bank of Japan has said in no uncertain terms, if you keep pushing us, we will push back. So the question is now, have they got the trousers? Are they all bark and no bite? Wait and see. I'm sitting here expecting this to drop literally within the next couple of minutes. It's probably not going to happen. I would imagine the Bank of Japan will wait for FOMC to be out of the way and the CAD rates and then they will drop them. But we've got a bond auction this evening as well at 6. We can't see who is purchasing in the bond auctions, but it'd be interesting to see if the Japanese buy any. They don't. Kind of says everything, didn't they? We're not buying any, but we'll sell everything we've got. So, you could even find that it starts at the auction later, but we'll see. Interesting. A lot of my MRA EA trades opening in the wrong direction due to the strong move. Yeah. Yeah, it's just because of ADR. 175 ADR on the pound US dollar. But Gav, what's the wrong direction? Are they opening in the right direction? Nobody knows where it's going yet. What's my average in Aussie New Zealand? That's miles away. 107,820 miles away. It was before the position trader EA closed all these positions out in profit. It was somewhere around there, I think. Something like that. So if this, because I've just taken another position there. So if this comes and taps that and grabs that position and then we drop back down, anything under 225 ADR, basically, anything under those lows puts me into profit on the whole position. So everything I've banked today and everything that's in drawdown, I can close out. But I'll make a decision based on price action, basically. US dollar yen, 150 ADR. Here we go, here we go, here we go. Japanese. This looks like a fight back to me. Yeah. This is a big yen order coming. This is Japanese intervention, definitely. Whether or not they've got enough to push it further, we'll wait and see. Just going to close my Aussie CAD out. That was a big, big order came in on the yen there. So they're not letting it go. Traders now banking that the Fed will cut just twice this year, which would be potentially now July, August, October, November time. So 2 cuts. That was a big order came in there, but basically they undid the lot, pretty much, almost, but not quite enough. So let's see if they put another order in. Exciting, isn't it? Pending orders on UJ hit. Time to cash in. Yeah, if you're going short anything against the yen, don't place a TP on it, for God's sake. Think about where it's going. Yeah, if the intervention move happens, yeah, you're down here. That's where you're headed. You'll be down here in an hour or so, potentially down here in about 3 to 4 hours. Yeah, so don't stick a TP anywhere that's 0.5%, 1%. This is a 5-10% move. These are paydays, but they didn't manage to pull that off there, did they? Certainly. There's nothing more coming in. I'm just waiting for Ueda to say something because they'll be watching this like a hawk. We did have something out of the Bank of Japan this morning, didn't we? Japan's economy is showing some weakness but recovering moderately. Yeah, see, look, Japan's 10-year government bond yield increases to 0.795, the highest since March the 15th. So there's a lot more money coming into the yen. Less reason for them to hold overseas. Ueda warns of possible monetary policy shift due to FX impact on inflation. Monetary policy won't change to address FX moves. It didn't say anything else about intervention threats, but we know what they're up to. So a little bit of a retracement off of resistance. You might find this is just a pump and dump. We get an A-shaped recovery off of these US moves, especially when the Bank of Canada numbers come out later. Right. It's like the Japanese are talking to someone. They're not talking to anybody. They're just pressing buttons. The Japanese will have orders set. So they'll have orders in the market. And this is the thing. They never, whenever they comment, they never say where their orders are. And they make a point of saying that they are not saying where their orders are. So you don't know where the Bank of Japan or the government have got their orders, but they have got orders in there. So it's basically they will have orders sitting there, and as soon as price gets to it, it's like a brick wall. Doesn't matter if you chuck $100 million at that level, they will just buy the lot, and it will, it just goes back the other way. So that to me looked like a large order being triggered. But the question is, are they holding it, i.e. to drive it back down into this area, or are they going to just dump it, which is what we have been warned that they will do. But you need to wait and see. Right, well, that's not happening at the minute, is it? So I'll keep an eye on that. Yeah, I think I'll just keep an eye on financial juice over there. Traders put bets on start to Fed rate cuts now September. So pushed back 2 months. So June, no, 3 months, isn't it? So June we were expecting, July, August, September. So going back 3 months now, which would put us at September and November potentially for rate drops. So is bullish. Let's see. Just degened into another UJ shorts, yeah. I feel like I'm watching a couple of school for kids having a fight. Yeah, it is very much that way, isn't it? It's interesting to watch. It just shows you the power. Yeah, to get a candlestick moving in this market takes millions of dollars. When you see these big moves going in, there's hundreds of millions. This is a $7 to $10 trillion a day market. When you see a move that goes from there down to there within 5 minutes, you can't even quantify the amount of money that's just been placed onto the market to make that thing happen. There are masses and masses of institutions pumping hundreds of millions of dollars into this. To make that thing move all the way back down to there in 1 5-minute candle is a hell of a feat. So we got a 51 pip move, 55 ADR, 56, 55 ADR. So that's a whole average daily range of movement done in one order. Big order. That's basically saying, don't try and get past us. So we'll see. We'll keep an eye on that. So forget RSIs and ADRs today. There's not really a lot you can read into any of this. On news days, ADRs kind of out the window. There's always an opportunity with ADRs for mean reversion. So a lot of the times when we get these big movements on news, if there are multiple moves in the day, or multiple news events in the day, as we have today, we've got 4 major news events, you'll get a big move up. And then if there's a contrarian move in the opposite direction, so if the US dollar rallies like crazy and then the Canadian dollar rallies like crazy, you get an A-shaped recovery, what we call an A-shape or a V-shaped recovery. So they open up completely and then they undo themselves within sort of 4 to 6 hours. So there are mean reversion opportunities. A lot of them are news spikes where they are basically knee-jerk reactions. Then the market calms down and goes, actually, no, that's not as good as we thought it was. And you'll find over the next 24 to 48 hours, you're back to where you were. Or the market sees it as a fundamental shift, in which it could be with the US dollar here, in that we get this big, strong move up. And then they go, right, let's have a think about this. Yeah, we got another 3 months now where we're not going to have weakness in the US dollar. Makes sense to buy it. So that what you then get is a flag break and run. So wherever you've got all these ADR hits, there are mean reversion opportunities on them, like that US dollar yen, for example. I mean, you're already out of that. Yeah, if you got in up here anywhere, you've just had an out. If you didn't take it, tough. But there was an out there. It undid the entire move. So there's opportunities to jump in, but you can't wait for reversal alerts on news days. It's a case of if you want to trade the news, you have to have jumped in and jump out very quick. So kind of ignore all of these today. It's just market being manipulated and moved around. It may well undo. It may flag and run. Yeah, don't know. So either way, when this candle closes, if we do not pull all the way back down to here, you're going to have a propulsion gap of some size put in here, which means either we're going to test and bounce off of that, they're going to keep adding to this position they've just created and rally away from it, or we're just going to gradually unwind that move. So up to you. These are the types of trades you take with stop losses. So drop down onto lower time frames, wait for some price action to confirm that it's a short. So we've hit resistance, limit orders have triggered. We're trying another go. If they start to sell back away from that area, short, stop loss, target. Yeah, these are the types of trades that are worth taking with a stop loss because you've got a massive risk reward on them. It's either going to flag and break or it's not. And if it doesn't, it's going to return to the origin of the move. So these are the types of trades that are worth taking with stop losses. It's that versus that. Yeah, 4 or 5 are easy if you like to trade that way. RSIs, again, there's not a lot of point in looking too much at the RSIs. At the moment because they're all going to change potentially. So we've got a euro pound long opportunity on the hourly. Again, there's no real advantage to either of these. We're sideways totally. It took me 3 months to get out of that thing because we just have been sitting sideways forever on it. There's no real impact to the euro pound with the Canadian dollar or the US dollar or the New Zealand dollar. So today's news, as you can see, doesn't really impact it at all because it's nothing to do with it. So this is a normal RSI extension to the downside as it was here. Yeah. So potentially just going to stay in this range and go back up again. So there's an opportunity for a long here if you want to take it. Yeah, same as that trade there, basically. That one there. So yeah, pushing back up into these highs. But obviously we are halfway in between the range at the moment. So there's a chance it's going to come back down and retest these lows down here. So if you take a first entry there and aim to get back up into those highs, if that doesn't work, second entry there, average, get out when it pushes back up again. News-wise, oh yeah, sorry, yeah. So if you take anything on the euro today, tomorrow is the euro rate, which is 4.5. And the monetary policy statement and the press conference. So anything you do on the euro today, highly unlikely you're going to get very far until tomorrow afternoon because they're not going to want to dump a load of money into the euro until we've got that rate announcement and we've got Lagarde telling us what happens. So what's happened here, and now with traders potentially pushing that interest rate change back 3 months, that is going to impact these press conferences. So these press conferences will now need to address what their thoughts are on that and what their thoughts are on whether or not they are going to stay in line with the US dollar or whether they may jump the US dollar and try and go before them. Euro has an opportunity to do that because the interest rate, the inflation figure on the euro is now at 2.6. coming down at 0.2 increments. So they are very close to target at 2%. And their inflation, their interest rate is lower. So there is a possibility Lagarde may come out tomorrow and say, regardless of what's happening in the US, we still see our inflation getting to target within the next 3 months. Therefore, we see no reason not to drop rates at some point in the summer, which means that the euro will drop first. So we could have a big drop on the euro tomorrow as well. So very unlikely they will change the rates tomorrow. Very unlikely, but we have to wait and see. So if you get into this long and Lagarde comes out tomorrow and says we're going to do an interest rate drop in June, that's going to be down through the floor. So up to you whether you get in on that sort of move, but just be prepared to have to scale into it at some point. So that's your only RSI extension on the hourly today. Everything else is 4 hour. I'm not going anywhere, are we? Everything else is 4 hour extensions. Euro New Zealand, that's already played out. Pound New Zealand's already played out. New Zealand CAD's already played out. So these are already, I mean, you've missed them. They've all moved off this news. Obviously, New Zealand dollar CAD, we've got more news coming out at 245 as well. So there's no point in taking anything new on the Canadian dollar right now because it's going to change in the next 45 minutes. There's your euro pound announced. There you go. So all the RSIs have gone because obviously all those RSI extensions that we just had are now no longer extended because the move's already played out. So there's your extension 75 on the euro pound. So that's the only opportunity to go long. You got US dollar yen obviously as well, which is, we know, extended, to say the least. So I should be getting into a new short on this in a second. Right, so there's your hourly candle going. So we'll see what happens now when they retest this high. So see when they retest the hourly high, what happens. Every candle from now basically on this US dollar yen is worth watching like a hawk. In fact, I'm going to stick it on my other monitor and just have it there permanently. So we've got more news coming in. Nothing exciting. Right, US dollar CAD 150. Going to stick another line up at that high so we can watch it. Can we see my trade manager? Yeah, 2.5 today, 5% this month so far, but sitting in drawdown. US dollar Swiss obviously now a little bit more underwater. Euro yen. Look at this. So euro yen, I'm still $128 in drawdown. That's my average price look. So that is my swap. So getting all the way down to there will have given me a profit, but not much because I've had to pay so much money in swaps to hold it. It's cost me $300 odd in swaps or so, I think. 145, 168, so that's 300. Yeah, $300 in swaps I've paid on the euro yen. So where this is a good indication of what happens with swaps and how swaps affect position trading. Normally, when I'm targeting 1% profit on my account, which in this case would be $500, somewhere around there, typically. Because you're paying swaps, obviously, I'm not even in profit yet. So that would normally be $250. So if I'd have got into one trade there and gone down to there, that'd be $250. But I'm not even in profit yet, even though I'm way beyond my average because of the swaps. Cost of doing business. Nothing you can do about it. But it's a good indication there. You know, normally you'd be looking at that and going, right, I'm going to close it out. You can't because you're not in profit on it yet. Well, you can do, obviously. But the more obviously size you hold, the more swap you pay. But yeah. The cross pairs, pound yen also moving strongly with the US dollar fundamentals. Now that's the yen moving, not the US dollar moving. This would be the yen moving. This is the yen combating that move. Yeah, so they are holding the US dollar yen in place by buying yen to combat. So every pound, every dollar, the US dollar is rallying at the moment. The Japanese are buying the equivalent yen to hold this in place so that this US dollar doesn't rally away, which means everything will drop against the Japanese yen because obviously they're buying yen. Yeah, which means that they are selling Australian dollar, buying yen. Is there a way of knowing which of the 7 currencies will become stronger? No. If we think about what you're asking, if we knew which of the currencies would become stronger, what would we do? Buy it. Yeah. If you knew the future, you would just do what is going to happen, wouldn't you? You can't, there's no way of predicting the future. Afternoon, blue trader. New Zealand dollar, US dollar, we can look at that. So that's coming down hard at the moment, obviously US dollar. So this is US dollar move. Yeah. I mean, there's nothing much I can say about it at the moment. Is this US dollar move going to continue or not? Don't know. We'll have to wait and see. So far, this is the first indication we've had of a really strong pushback. So if traders are, I mean, this is the thing I never understand about what they say on Financial Juice. Traders push bets. Who are traders? Yeah, who is that person? Those people that they put into this traders bracket. So traders are saying that the rate cut is now going to be September. Quantify who that is. If they came out and said the Fed or the Bank of America or Reuters or I don't know anybody else, I would be like, right, let's listen to them. But the word traders just means that some people think that it's now going to be September. They could be classing me in that, couldn't they? But this is the biggest, strongest pushback we've had. Really, this cycle of interest rates. So we initially thought we were going to go April. Then they said May. And then we got to June. Yeah. So this is sort of the beginning of this year, end of last year. This is where we thought interest rates were potentially going to start to drop for the US. We've managed to push them back a couple of months. What we've just done, if you can believe this, is push this back 3 further months. So double the pushback we've had for the last 6 months. So this is the biggest, strongest pushback we've got potentially. But we need to wait and see what the Fed says. So again, all of this move here that you're seeing is speculative move, which is the market basically going, this looks good for the US. This afternoon, at 7 o'clock this evening, the Fed could come out and say, I don't know what you guys are doing, but we're still going to drop the interest rates in June. It's only gone up 0.1, guys. It's not the end of the world. That will be back there and potentially up here. Yeah. So just because this is rallied doesn't mean it's going to do this, do that. Look at this. Whacking great news event. Undone. 24 hours. Yeah. So this is all this is that in reverse. So back there tomorrow afternoon. But, you know, any trade you take now on any US dollar pair, you've got a 50-50 shot of either that happening or that happening. Yeah, I don't know what's going to happen. No one does. So those are your options. So if you like the idea of fading a 175 ADR move on the New Zealand dollar, US dollar, get in long, stick a stop loss somewhere down here or down here, and get out when we get back to there. If you don't like the idea of it, wait for this to pull back and then short it. I've no idea which way it's going. No one does. I do know, though, that if this continues to go, there's a hell of a good chance that that's going to drop like a rock, in which case that's going to do that. Well, we'll see. Don't forget, we as traders or as the community, watch levels. Yeah. Everything that you see in trading is based on human beings analyzing stuff. Human beings have seen this thing drop from this level multiple times. Where are we? Back to, I've gone way too far. Oh, there you go. That's it, isn't it? So, you know, we see this drop from 152. That was the last intervention move. We see the retest of that level and a drop. We see us hit this level and the Japanese tell us not to push it any further, and we don't go anywhere. So all we're doing is we're speculating that the Japanese are going to hold 152. Bank of Japan could be sitting there now going 155 is our line in the sand. We don't know it. So this could be the new norm. And we could sit here and do that for 3 weeks, for all we know. We have no idea. But what we do, all the only clues we have to go on are what the BOJ tell us. We don't know if they're going to do anything with this, do we? So, but that now is your new line in the sand, 152.5. Probably some SMC guys with their interbank also telling them it'll be September. It's probably the interbank price delivery algorithm that has calculated it, fed it out to Bloomberg, and now Bloomberg have said the ICT said it'll be September. So now everybody knows that's when it should be. Exactly right. Euro US weekly range hit. So still pumping this US, but as you can see, that isn't. So still got a load of strength coming in the US dollar. Still powering up US dollar Swiss, powering up US dollar CAD, Euro US dropping, pound US dollar dropping, US dollar yen not. So the Japanese buying the crap out of the yen to hold this in place. This is a battle of bank balances, basically. One of those two countries at some point today will run out of money. And the other one will take control. Or one of them will just press the nuke button. It's like a battle. Yeah, you got battle lines are drawn. Got a load of troops running this way, a load of troops running that way. These guys run out of ammunition first. These guys will push back. If these guys run out of ammunition first and it pushes up there, these guys will press the nuke button and blow them out the water. Literally all that's happening under the hood. They need to hold this price there to keep their economy sound. These guys want it to rally because they want the US dollar to be more attractive, which gets investment, makes everybody richer. So, you know, everybody's got a valid interest in these moving up and down. Euro US 200 ADR. They're still pushing. US dollar Swiss will be rallying still. We're at the highs now on US dollar Swiss. So your next resistance on this. I'm going to have to get out of some of this, I think. Just closing out some US dollar Swiss. I'm going to give it a little bit of room. So I'm just going to get out of, I've just got out of one there. Just taken that one off. If we push up above towards 175 today, I'll take another off. And obviously put another one on up there somewhere. But obviously we've got the Canadian dollar rate to come and we've got FOMC. So I don't want to scale out of too much. And I don't want to take a big loss from anything below the line down here just because there's a good chance this will unravel, especially if the Japanese jump in. But it's getting a bit too big. US dollar yen don't have to drop, have to go up because US is bullish, in my view at least. Bruno, good for you. You're exactly why we make money. Anyway, don't forget, every time the market moves, there's somebody that has the differing opinion. There's a buyer and there's a seller. Yeah. You're buying the US dollar, you carry on. Make sure you got a stop loss on it, though. Right. Pound US dollar 200. So US dollar still rallying. I would agree with you on buying anything US dollar, but not that. You've been watching the news for the last 2 months, you know why. But there's no point in much in going through anything else today because obviously there's so much movement going on in the market. So Canadian dollar this afternoon at 245 in half an hour. So this is going to come out as expected. There's a good chance that this may rally that Canadian dollar. However, this is where you're going to get that news as to whether or not it's bullish or bearish. So at around about 3:45 to 4 o'clock, when that press conference is underway and we're getting towards the end of it, we will know which way the Canadians are going to go in line with the US dollar and whether or not they're going to stick with July, or whether they're going to push back. So if we get that information, that could well rally that Canadian dollar or dump that Canadian dollar. So somewhere around about 3:45, 4 o'clock, we'd probably get that move out of that. It could, obviously, if it rallies dramatically, the Canadian dollar, help the US dollar a little bit further. However, if it drops the other way and we get a big drop in the Canadian dollar, that will stop that US dollar rally in its tracks as well, and we'll probably start to unwind some of it as well. So bear in mind that's coming out. So whatever happens with the rate, you'll get a spike off that, but it's not going to be the move. The move will come at 3:45 to 4 o'clock this afternoon. And then after that, 2 hours later, well, 1 hour later, or 2 hours later rather, we've got the bond auctions, which will be interesting to see if we get an awful lot of purchasing through that, because the Japanese have probably decided we're not going to buy any this time around. So it might be a case of that weakens the US. And obviously, as soon as Powell starts talking, there's a good chance he will unwind the entire move, because the US don't necessarily want to poke this bear, because there's a good chance it will obviously hurt them in the long run. So we'll see what happens. But there's multiple news events this afternoon to potentially undo these moves or continue to rally them. So just be careful this afternoon. If you are short US and you've got anything that is particularly getting underwater, like I am with US dollar Swiss, Aussie CAD 150 ADR, great, because I got out of that. Just be mindful, obviously, that this could easily go to 25 to 300 ADR if we get news lying in the right direction. So if we get positive CAD, that will happen. If the Fed do not dump it this evening, you'll be up here somewhere. So just bear that in mind with drawdown. But if we put this, if this move holds for the next hour, we got another 50 minutes, 40 minutes. So if that move holds here for the next hour, you're going to have a propulsion gap form. That will either get filled, in which case, obviously, you're fine, or they will bounce out of that propulsion gap and it will basically become a flag break. So that's the point then that I will probably have to get out of some of this US dollar Swiss. But not the result, really, that I was expecting. But equally, I'm not too bothered because they've made the move that we've been waiting for. The Fed needs to see evident weakness in the economy, or the kind of cooler inflation readings that were the norm in 2023 in the second half. 3 months into 2024, we have neither. Cuts get deferred. There we go. So again, more confirmation. And now just this cuts gets deferred isn't bullish. Yeah, this is not the US increasing interest rates. This is the US not decreasing interest rates. Yeah, It's not bullish nor bearish. It's neutral. Yeah, we've had a massive bullish move. Not necessarily a bullish move. It's a knee-jerk reaction. As I said, I've pointed it out already. Yeah. These knee-jerk reactions happen a lot and they get undone. Yeah. This is a knee-jerk reaction. So don't read too much into it just yet, especially if we get that Bank of Japan intervention. Is it only the Bank of Japan that responds to a stronger dollar in that way? Yeah. Just from an economic perspective, it's not cost effective for the Bank of Japan to allow rates at that level. This is why the intervention moves happen. Yeah. So the person that's long on the US dollar yen, pop back to September, October 2022, and just see what potentially is on the cards in the next 24 to 48 hours. Yeah. So if you're long, just go and check history. But obviously that was a different time. We were on negative interest rates then. We're not negative interest rates now. So there is, this is what I've been saying. We're waiting to see if the Bank of Japan talk is talk or whether it's action. And that's what we'll hopefully find out in the next couple of, in the next 4 or 5 hours, basically. If the Fed rallies, we'll find out. If the Fed undoes this move this evening, not a problem, is it? No. But the Bank of Japan's the only country, because it's been running in negative interest rates for 16 years, it's the only country that has all of its money tied up in overseas asset, which means at any point they can liquidate the overseas asset into yen, which powers the yen up, which is why we get these 800% ADR moves in the yen. There's no other country that does that. All other countries have and always have had positive interest rates. So they encourage you to place money in the currency in the country. The Japanese have been running at negative 0.1 for a long time, i.e., do not put your money in the bank. Do not hold your money in Japanese yen. Hold it in any other currency you like, just not ours. Yep. Which means that if you think about it, whatever country you're in, think about your central bank having a zero bank balance, but so it's like cash poor, asset rich. So I've got a zero bank balance in pound in the UK, but I've got $25 quadrillion worth of US bonds. At any point I can go, screw you, US bonds, I don't want you anymore. I want to turn that into pound. What's going to happen to the pound US dollar? Through the roof. That's what happens to the US dollar yen on an intervention move. But no other country does that. The Swiss do to a certain extent because they're a safe haven. So when money comes into the Swissy, it goes out into investment. When it goes out of the Swissy, it does vice versa, or rather the other way around. So the Swiss do, to a certain extent, have the power to make a fast movement, but not anywhere near as much as the Japanese do. But it's not in their interest to do it either, because it upsets the market, which is what they don't want to do, which is why they always deny it. Every time you see the Bank of Japan saying, we will not comment on FX moves, we will not comment on intervention, it's because the rest of the world really doesn't want them to do it, because it upsets the apple cart. You've got a really nice functioning system where everybody is happy to make money. If all the central banks of all the other countries are in that way and the Japanese do that, all the central banks go underwater. They don't really want to upset them. But equally, you've got to look after your economy and your businesses. And it's just not cost effective if the yen is buying less and less and less and less and less of the US dollar when your major export is to the US. So they have to do it. Or rather, they have had to do it. And this is what we're waiting to see, if they still do have to do it. But we will find out sometime this afternoon. I needed to stop drinking coffee during the stream. It hurts coming out of your nose. I do like making you laugh, Brian. I'd like to see a picture of your towel. No, actually, no, I'd take that back. I don't want to see your towel at all. Probably going to need your towel now. Just entered on the long euro pound via H1M15. Yep. So you've had a 5-minute reverse alert and retest. Although at the moment it's looking more like it's sideways at the minute, but yeah, you're nicely extended. But obviously bear in mind, like I just said, tomorrow at 1:15, we've got the Euro rate announcement, and then we've got the press conference, which is what we'll be on for streaming tomorrow afternoon. So Lagarde could do that or that tomorrow. If Lagarde doesn't give us any bullish or bearish indication, we're just going to do that. So it doesn't matter whether you get in long or whether you get in short. If you get in short and it comes down to here, you get out. If you get in long and it comes down to here, you get in long again, because it's just going to do this. So it doesn't matter which way you go with it, really. But obviously it's extended to the downside at the moment. So it's obviously they will be looking to get out of a portion of that move at some point. So that propulsion gap will be a target to the upside, which is about half an ADR, 3/4 of an ADR. Eri, can you provide your thoughts on Aussie New Zealand? I've just got out of half of this. And I've just added another. So I've got a bad eye at the moment. Got a red eye. I don't know why, but it's really tender. Which I've just poked, which hasn't helped at all. So these positions here I got out of today. And I did some drawdown control, not on that one. I did some drawdown control on that position. So I took that one off completely using the profit from those and banked 1%. Because the position trader EA got me out of those positions because it was in profit. These were all taken with the market reversal alerts EA. So my average was around about here somewhere. So I've added another position on manually. And I've got another pending to trigger as we break this low here. So we've hit that, bounced, and I'm hoping that's just a bounce play, which is going to get run over, and then I'm going to get into a second short there, which will bring the average up, but I'll probably exit somewhere in this propulsion move. So that's where I would look to get out. And if you look at the overall move, yeah. So this is where I would look to get out. I think there's a good chance we'll be getting down to this sort of area here. But I'm not going to risk it. But what's happened with the New Zealand dollar this morning, obviously, is the inverse of what happened on the New Zealand dollar there. So there's no reason why we shouldn't unwind this. But look how long this has taken. I don't want to hold it all the way down to there in case we get a bounce out. So I've banked 1.5 odd percent. No, it's 2 point something percent on that in total. I've done drawdown control. So if I can get it to roughly break even, I will close the rest of it out. But definitely should be looking for a down now. This is a classic climb the stairs, fall down the elevator shaft type move. So you could easily be down to this level within the next 24, 48 hours. Yeah, they'll rally it for a month and undo the whole lot in a couple of days. So we'll see. But if you look at it on the 4 hour, it's a little bit clearer what we've been doing. So we're looking to come back and test the 2472 area somewhere, I suspect. I'm not buying US. I'm not even trading. Excellent. I'm just saying, if all the pairs are against the US dollar, they all dropped. All pairs are now are not. I don't even understand what you're saying. Sorry. Okay, maybe I'm liquidity. Here we go. You're an ICT guru, aren't you? You're not liquidity. The banks don't even know you exist. If you had 100 million in this game, they still wouldn't know you're existing. You're a fly on the shoe. In fact, you're a piece of poo coming out the fly's bum on the bottom of the bank's shoe. You are not liquidity. That does not exist. They don't know. 90% of the transactions that go on between banks, so if you are an ICT student, 90% of the transactions that go on with banks are what are called OTC transactions. They're over the counter. Yeah, they don't even appear on this chart. You're seeing the residue from institutions here. Yeah. So this whole hunting liquidity bollocks, it's just, you are not liquidity. And the fact that you're talking about pips, no, it tells me you don't know what you're talking about. So go watch the bootcamp, Bruno, and then come back when you've learned how this thing moves. Right, I'm off. On that note, could do without ICT people today. AZ, haven't closed out any of my Aussie New Zealand yet, looking for a little more movement. Yeah, I didn't want to be honest. This is not what I wanted to do. I forgot stupidly to turn off the targeting on Position Trader EA. So I didn't want to get out here. I was nicely in profit, not nicely in profit, but nicely moving towards profit. And I looked at it and I was like, damn, I didn't want to get out, which is why I've just added these positions on. So I've basically added on a third of what I had, and I'm looking to add, ideally, what I'd love to see is this push back up, retest the reversal alert, and then drop. So I get that position on, and then I get that position on, and my average will be back up here, which means I can also profit on this move, as well as the move I've just profited on. But we'll see. I don't think it's going to be honest. I think it's just going to come down hard from here. Gav, poo emoji. Yes. I've given up arguing with ICT people. I really have. They are so brainwashed into thinking that there is this magic. I don't know how he's done it, but he's brainwashed so many people. Yet they're not making money and they still follow him. This is the thing that I don't get. I just don't get it. And I've given up. I have arguments with people in Telegram constantly about ICT stuff. And yet, as soon as I turn around and say, show me your P&L, none of them ever contact me again. They vanish. It's like, well, yeah, but I'm not making money out of it. Really? So you're following him. He's telling you what to do or how it works. He invented the interbank price delivery algorithm, which controls the market, which nobody that I know in banking has ever heard of, and you're not making money with it. And yet you're still watching everything he does and paying him a fortune in YouTube fees. I just, every argument under the sun I've had with these people, and I've just given up arguing. I now just call them idiots, and I don't care if they don't come back to my channel. Bruno, if you are an ICT, if you're not ICT, Bruno, I'm very sorry, but if you are ICT, I'm wearing a Tyvek next stream. What's a Tyvek, Brian? Can you say cult? It is the cult of ICT. Bruno's not ICT. Liquidity was just a way of saying it. No, the only reason you're using that term is because of ICT. See, Bruno doesn't even know he's brainwashed, yeah? Before ICT came along, the word liquidity did not exist. He created this whole nonsense, and everybody now talks about it. It's just, I don't know. You can't argue with them either, so there's no point, is there? Off just as the market opens, yeah. Well, I'm not trading that. I'm not trading indices at the moment. I've had enough of indices. Until this market is back to normal, I'm just giving up the indices. They're too erratic at the minute. Any findings from your long-term average ADR bands research? Yes. What did I do? So this is, oh God. This might take a while. So basically, the ADR extension research that I did, I've basically come to the conclusion that there is a very good edge, but it's an investment style edge. So I managed to generate quite a big return using it. But so it was 100 wasn't 130, it was 200 and something percent return on the portfolio with a 70% strike rate. Now, this is the thing that I was homing in on. Right, this is a stop loss based strategy. I know, stop losses, but this is using a stop loss. So this is only part of the research. But for those of you who don't know what I'm talking about, I suppose I ought to quickly say what I'm talking about. So I developed I've broken it as well. I've made modifications to the EA. I don't think this will work. Did I download the updated version? I can't remember. I think I did, yeah. So basically what I was doing was looking at, this is the 72 EMA daily, the quarterly moving average. And these are, I think these are weekly extensions. I've cocked it up because I've developed a new version to test weekly ranges as well. But basically what I was doing was looking at how often price gets away from that moving average by percentages of ADR. So when you look at the 72, yeah, as we know with the 72 MA, when price gets too far away from it, it does this. Exactly what we're playing now. Yeah. When price gets too far away from the 72 MA, it's the elastic band theory. It comes back. So what I was doing was measuring how far away from the MA we get as a percentage of ADR, i.e. 1 ADR, 2 ADR, 3 ADR, 4 ADR, 5 ADR, etc., to see what the extremes were. And I was working off of 5 and 6 ADR as reversal points, looking for a way to obviously make money out of it long term. So I was getting in basically when we get to 5 and 6 ADR, but I was using a stop loss of 3 ADR and a TP of 1.5 ADR. And this is what these results are. So these are using a stop loss, which is why it's got a strike rate. So it was a 70%. So it's a 70% strike rate strategy using 5 ADR. So when I used 6 ADR, I got around about an 83% strike rate. Yeah. So if you wait until price moves 6 ADR away from the 72 moving average on the daily and you enter, you 83% of the time, it won't move more than 3 ADR against you and it will move 1.5 ADR in your favor. So there's a negative R return on it. However, what I did then was I removed that 1.5 ADR target and I used a 3 ADR target and then a 1.5 ADR trailing stop. That's what produced this result. So there is a big edge. This is a test over, forget the numbers because I'm using a fixed pip stop, a fixed lot size on all instruments. So obviously every instrument's should have a different lot size because obviously they're going to be way out. So, but as you can see, the P&L here, this is a test over a decade. So this was tested from 2014 to date, trading over COVID. Yeah. So this produced a huge profit even through COVID. When that COVID crash happened, it made money. Yeah. So it's robust as you like. As you can see, Aussie dollar CAD money, Aussie dollar Swiss money, Aussie dollar yen money, Aussie dollar US dollar pretty much break even. Euro Swiss made a loss. Euro pound made a small loss. Euro US made a small loss. Pound Swiss, pound yen, and pound New Zealand made a loss. Pound didn't do very well. Main reason being Liz Truss crashed the market. That's where that loss happened. So I've tested it. If Liz Truss didn't open her mouth and if COVID didn't happen, this would have made an absolute fortune. But Liz Truss did open her mouth. COVID did happen. We did have war breakout. And in the future, that sort of stuff is going to happen again. There's nothing we can do about it. But overall, as you can see, the vast majority of pairs made a profit. Very few didn't, with a very healthy strike rate. So there is an edge there. And the edge is 5 ADR from the MA or 6 ADR from the MA. Now, some of these would only take somewhere around about 8 to 20 trades a year. On average, it was 11 trades a year. So you're getting 1 trade a month. So if you look at individual currencies, so this is the portfolio, obviously, of every single FX pair. But if you look at individual currencies, so that's your monthly performance, 2014 to 2024. You had 3 losing years in there. Guess where the big losing year was? 2020, COVID, right? So every single year, apart from COVID, you can kind of ignore that. Oh, no, you can't ignore that one. Sorry, no, can't ignore that one. So the first year, it didn't make money. 2019, it didn't make money. 2020, obviously, was COVID, so it didn't make money there. But all of the other years, it's been absolutely fine. So all it's telling us is when the market is not having a pandemic, we're all right. Yeah, which is pretty much all time apart from 2020. So it will just always work. In normal market conditions, it's worked absolutely fine during COVID recovery. Yeah, we've had some good years, we've had some bad years, but overall it's making somewhere in the region of 10 to 30K. On a basic, this is on a fixed lot as well. I've no idea what the risk portfolio is. I'm looking to test whether it's got legs. If you look at individual currencies, so this is the New Zealand dollar CAD, you can see here, there's a hell of a lot of months where it doesn't trade. Because unless this thing is pushing hard, typically on some kind of fundamental news, exactly what we've just had today, where we're waiting for the Japanese to intervene, yeah, it's not going to do anything. When it has a big move, we're waiting for the mean reversion. Yeah, it doesn't go much more beyond 5 or 6 ADR away from that moving average before it has to do it. Aussie New Zealand today, case in point. Yeah, we are 32. 30, 60, 90, 120, 150, 160 pips away. So what are we here? 5.25 ADR away. Look what's happened. Bang. Clockwork. 5 ADR away. Retrace. I mean, we can measure this one, but you can see it's pretty much equidistant. So we are 32 is ADR. At the time of that retracement, we were 170 odd, 6 ADR. So it's always 5 to 6 ADR away before you get that retracement, virtually all the time. So whichever of those you decide to get into, so if you choose 5, if you stick a 3 ADR stop loss on it, there is the odd occasion it gets hit, especially with COVID, obviously, and Liz Truss. But that 3 ADR stop loss, very, 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 very rare it gets hit, which is why the strike rate is so high. Now, if you put a trading stop on it, let's say you took that one. I don't know what the R return on that is, but it's astronomical. Yeah, and you will catch some of these. The problem with the strategy that I've found is, yes, there's not many trades, but look how many reds there are and how many blacks there are. You're going to get the odd losing month in there on all of them, some more than others. Yeah. The problem is swaps, because the average hold time on these trades is typically somewhere in the region of 2 to 6 weeks. So there's obviously ways and means around that by going in with much higher lot sizing and much lower targets, which means you will take quite a bit of drawdown on some of those occasions, but you can get out of the trades faster. So I need to do a little bit more testing on it, but there's a definite edge in it. A definite edge. And if you look at the portfolio return, and again, this is just using one lot So I've no idea whether it's over leveraged, under leveraged, or was it 0.1s? Let's have a look. List of trades. Lot size 1. So yeah, every single trade is taken with one lot. Every single one. So on the pound US dollar and the US dollar yen, one of those will be risking 3.5%. One of them will be risking 0.6% or something like that. Ridiculous. Yeah. So when you actually get the right lot sizing in there, you probably find that there's a very healthy equity curve, because some of these losses will be bigger than they actually would have been. Equally, some of these profits might be bigger than they would have been. But the equity curve is also, look at it, not too bad, apart from, you can obviously see where the problems are. It's, this area around the COVID time is where we have that problem. It still made money, a very nice amount of money. So, but it needs a little bit more work. I've got to do more confirmations. I want to test different entry and exit criteria, and more importantly, I want to test it as a position trading strategy. Yeah, because the whole idea of me testing this was to replace the RSI for periods as we have at the moment, where we've got these ridiculous market movements, which we've had for 6 months, where we're doing this. The RSI is utterly useless. Then again, so would an ADR extension be useless. But because ADR contracts as price contracts, those ADRs get closer together like Bollinger Bands. And that means that when that move starts, we'll be able to get in as soon as that move gets underway. You won't take trades through these areas, which is why you've got so many zeros on those currencies, where you just don't get trades. There is no opportunity to trade, is there? So, but yeah, it's got legs. Oh, that's what a Tyvex is. So that's replaced your towel, has it, Brian? I wear a Tyvex. Although I would like to, just for a laugh one day, just go down the shops dressed like that, maybe with a big mask on, and carrying a canister with a whacking great nuclear warning logo on it, just to see what people did in the shop. Yeah, and maybe have a little Geiger counter there. And every now and again, as you bend over and pick up some beans, go, and then put them back down again and walk off. Anyway, you watch someone will come up with that and do that soon. ICT has created a movement based on new words for old knowledge. Exactly. I've got a video on that, as you know, in here. Why people shouldn't buy trading courses. That one. Anybody following ICT or interested in ICT, or anybody like Greg Secker, Nirav, anybody out there that you get bombarded by trading courses and you're thinking about buying a trading course or following somebody or paying money to their Telegram group or anything like that, go and watch this first. Seriously, go and watch that, because you already know everything they're going to teach you. Got some alerts going off. US dollar yen 175. Oof, look at this. Pound odd 200 ADR. Aussie dollar US dollar 225 ADR. That's the first time we've been here for a while. That's the Bank of Canada. Oh, sorry, I've just been waffling through the interest rates. 5, as expected. So it's the press conference, which is where we're going to get the movement in half an hour. So I got out of that Aussie dollar CAD totally wrong, far too early. There we go. Look, climbing up the stairs. How many ADR away from the 72 is that? 130. That's only 3. Not far enough. Okay, we are out into totally uncharted territory now on this US dollar yen. Look, pound US dollar 225. So this is a negative reaction again, piling money into the US. So out of some more Swiss franc, US dollar Swiss weekly range. So that's your propulsion gap on the US dollar Swiss. Your propulsion gap on the US dollar yen is going to look like that, unless they obviously press the nuke button in the next hour. Still money coming into the Japanese yen. Aussie dollar yen dropping, Swiss yen dropping, CAD yen stuck because we just had the CAD news, but that may have changed. Euro yen still dropping, pound yen still dropping. So they are still pumping the yen. It shows you how strong this move is into the US. Looks very similar to Keltner channel bands. Yeah, I mean all bands look the same. You know, I mean that's anything that is a standard deviation indicator will look similar. So you know, Bollinger Bands are a standard deviation from a moving average. Keltner channels are a standard deviation from whatever he's calculated. This is my standard deviation, or rather average daily range deviation from a moving average. So it's a very similar concept. But the difference between this and others is this works off of the average daily range of the instrument, which is a volatility measure. I suppose Bollinger Bands are as well, aren't they? But the calculation is very different. So, but again, you know, the next step in my analysis, if you like, of this will be to pop things like Keltner channels, Bollinger Bands on the chart and see if there is any kind of confluence between them. Because obviously you could use you know, it wouldn't be a standard deviation, it would be a different deviation. But you're never going to get it measuring up with ADR accurately, because ADR is only a measurement of 10 days volatility. So it's much more dynamic and changes a lot more with the instrument. So, but they're all, you know, and again, that video I've just said about, yeah, stop buying trading courses. Yeah, this is nothing new. Yeah, there's only two strategies, isn't there? Well, three, really. There's mean reversion, breakout, and trend. There's only three strategies on the planet, which is what that video basically says. Yeah, doesn't matter what that guy on that trading course is teaching you. He's teaching you something that you already know and already exists. It is either a mean reversion strategy using different indicators to another one, which has the same strike rate, which is 50%. It is a breakout strategy, which is a breakout strategy. It's using a different way of measuring a range to another one that you've already got. The chances of that working are 50%. Or it's a trend-based strategy, which will be using either a Fibonacci retracement, a distance from a moving average, a crossover of a moving average, or it will be using a harmonic pattern to time a pullback in an upward move for a trend. Yeah, so it's mean reversion, breakout, or trend. There are only three strategies on the planet. Prove me wrong. Give me any indicator out there and I will tell you what it does. Every oscillator you can get on a chart, like the RSI, is telling you what price has just done, which is move up or down. So if it's just gone up, you are using it for mean reversion. CCI, MACD, RSI, stochastic, all of them do the same thing, move up and down with price. Doesn't matter which one you use, none of them work. Yeah. Moving averages, you can use the 72, the 24, the 200, the 100, the 50, the 20, the ketchup, the mayo, whatever you want to call it. All it's doing is telling you what the average price was in the past. No use whatsoever, is it? It doesn't tell me what's going to happen next. That's what I need to know. If something's gone up, I need to know what's happening next. If you measure a range using any kind of pivot level, to either perform mean reversion or a breakout and retest. Doesn't matter which you use. Use any type of pivot. They all do the same thing. Use support resistance. It does the same thing. All does the same thing. Every course you buy is a recycled version of something else. Nothing's new. This is not new. This is called standard deviation, and it's used for mean reversion. Use a Bollinger Band if you want, does the same thing. I'm just looking for an edge because everyone's using Bollinger Bands. I'm using average daily range. It's different. But it's still a mean reversion strategy. You get in on an extension and you wait for the pullback. It's elastic band theory. All the same stuff, isn't it? So it's, yeah, I mean, it will look very similar to other things. You know, not reinventing the wheel here. I'm looking for an edge in the market based on a historical piece of information. But my robustness testing on this is to say, what if I get in at 5? What if I get in at 6? What if I get in at 7? What if I get in at 4? Will they all produce alpha over a period of time? Yes, it's robust. Should I use a 3 ADR, a 2 ADR, or a 1 ADR stop loss? And should I target a 1 ADR, a 2 ADR, or a 3 ADR TP? If they all produce profit, I've got an edge. So if they all work, and they all work, and they all work, every combination of them works, it's a robust strategy. Historically, whether there's going to be another Liz Truss, or another Russia invasion, or another pandemic, don't know. But I know from my back testing, they don't help. And I'm going to lose money in them. Nothing I can do about it. But yeah, it's just another way of getting in the market. In the same way as you would any other way. So was that 270% gain over 10 years? Well, yeah, but that was just using one standard lot on every instrument. So it's completely out. You can't really take that into account. What I'm looking for, the reason you should use a fixed lot for initial back testing is it gives you a stable playing field. Yeah. So if you use 1% of an account when you're back testing, the Euro CAD's just hit ADR, everything's going to be hitting ADR today. If you use 1%, what you're doing is as you are making money, you are risking more. As you are risking more because you're making more, you run the risk of losing more. If you use a fixed lot of 1, every single time you take a trade with a stop loss, you are risking pretty much the same amount. Yeah. So you should always use a fixed loss for a fixed lot for initial testing to get an idea whether there's an edge there overall. Yeah. Forget the money. It's not about money. It's about, have we got a strike rate which is positive using a stop loss based strategy, or have we got with a position trading strategy an edge that doesn't go into too much percentage drawdown on the account? And if you went in with 1 and it blew the account every time, use a 0.1, and then you'll get the test result. And it gives you an average of what it would draw down, doesn't it? Then you would start to use real money. But the problem with all these, you know, all these EAs you see on the marketplace where the profit curve on the back test goes like that. Yeah. And they go, we turned 100,000 into 20 million in 3 years. Yeah, because you started risking $10 ago, and up here you're risking $50,000 ago. Your broker will not allow you to put that lot size on. Yeah, your broker has normally a limit of 100 or 500 lots. To get a trade on at that level, you'd have to take something like 150,000 lots. You can't. The back test will be able to do it. You won't be able to do it. You can't produce that. It's all fake. It's all smoke and mirrors. You can't get that lot size on. Think what the commission is as well on 100,000 lots. But they ain't taking commission to account, have they? Swap. But they tend to be 5-minute strategies, don't they? Which don't work anyway. So New Zealand dollar CAD. ADRs all over the place. So we're out the highs here. Still no news from Japan. Biden has just said something. obviously not important. So the Bank of Canada, 5% obviously as forecast, which was what we were expecting. The further decline we've seen in core inflation is very recent. We need to be assured it's not a temporary dip. So basically referring to this little drop that we had. Yeah, so don't forget the CAD are far ahead of the US. Well, not far, but they are ahead of the US in inflation figures and coming down. The US is now going up. Canadian is going down. So what he's basically saying is this is a short-term drop. If the next one comes out as a negative 0.1, we know we're on the right track and they are not on the right track. Therefore, we might drop our rates before them, basically. Quarter four GDP, it's fine. 0.5 growth. So GDP, they're not going into recession, which we kind of know anyway. Inflation average at 2.6 in 2024 versus 2.8 in January, 2.2 in 2025, unchanged. So basically saying we anticipate getting close to that target next year, but target being achieved in 2026. So they're expecting inflation to peter out and not drop any further. So don't forget, Bank of Canada are a little bit unique in the fact that they are linked to oil as their major export. So they are directly affected by oil price a lot more than the other nations. That's coming in there. Is it possible to include ADR distance from EMA in future updates of the reversal alerts EA? There's no reversal alerts EA updates happening. That's done. I might include it in the position trader EA if there is an edge that is executable. One issue might be a problem in forward testing would be broker sweeps overnight. Well, you would have it not the same as the position trader EA. It doesn't trade between 11 at night and 1 in the morning. So that wouldn't affect it. But if they pushed it half an ADR, this is what I mean, with robustness testing. When I'm doing my robustness testing, I'm testing 5 ADR. I'm also testing 4 ADR and 6 ADR. If only 6 ADR makes money and 5 ADR doesn't, it's not robust. These have both got to make money. So if you were at 5 ADR and the broker spread it by 1 ADR at night, hit that level and triggered an entry, doesn't matter, does it? I've tested that works and I've tested that works. If we're up there and they spread it by 1, so what? My stop's 3 ADR away. Never going to hit me. Never going to hit 3 ADR. 1 ADR, yeah. I mean, Aussie New Zealand last week, look. Let's see on the hourly, isn't it? Yeah, look. That was my stop loss on that trade. That was where the market closed. So the market closed there. They spread it up to there. Right? Price didn't hit it until 2 days later. Distance between that candle close and my stop loss was 41 pips. ADR on this is 32. So that's over 1 ADR. That's 125% of ADR. They spread it at 11 o'clock at night. So if they're going to do that, spread it by 1 ADR, you need your EA not to be trading there. And that's what the position trading EA does not mind. Anyway, that's why those time settings are in there. Specifically why that is there, that time setting. Auto trading times. Do not turn off, go to sleep. Don't look at it. Don't do drawdown control. Don't enter, don't exit. Don't ignore everything between 11 at night and 1 in the morning, because of that. If it's a hard stop, you're dead. If it's not a hard stop, which I wouldn't use, it's not a problem. So, but that's what robustness testing is all about. That's why you test it. Yeah. So this is, when you're looking at robustness testing any strategy, if you've got a strategy which is when price hits 70, RSI goes short, yeah, price is going to hit 69.96, right? Your broker, who is spreading by 1, will trigger you. My broker, who's spreading by 0.2, won't trigger me. Yeah. So your robustness testing has to be, all right, I want to get in at 70. So let's test 68, 69, 70, 71, 72. Let's go 5 notches on RSI. Does it work with all of those? Yes. So what we're saying is when it's pushed up, go that way. Doesn't matter which. This is why I test with everything. 70 works, 75 works, and 80 works. Doesn't matter which you take. Sometimes it's best to take 75. Sometimes it's best to take 80. Sometimes it's best to take 85. You don't know. But what we're saying is if the market's pushed hard in one direction, it's going to pull back. So this gives us an indication of doesn't matter where you get in, you'll be all right. That's what robustness testing is all about. Testing the intricacies. A 2-pip spread, a 3-pip spread, a 4-pip spread, a 5-pip spread. Would I have made money regardless of what the spread was? Yes, robust. If you use a 2-pip spread and it makes money and it doesn't make money with a 3-pip spread, that's not robust. If you get a 4-pip spread, you're going to lose money. You've got to test all the different system parameter permutations. The 80% strike rate means the probability will be fewer trades per position. I haven't done position trading analysis on it. That is using a stop loss. If you're position trading it, your strike rate is going to be higher, isn't it? Because we're not taking loss, we're scaling. Again, I haven't tested position trading. It's on my to-do list. However, I did spot. I'll have to get the other version because this version I was halfway through programming a change to test a different variation, and I've downloaded the half-coded one, so this isn't doing what I want it to do. But there were the odd occasion where you hit a 5 ADR deviation. Probably find one actually. So Pound New Zealand, funnily enough, just hit 150 ADR. So here is a good example. This is not a great example, but you can see this big strong move there. So ADR at the moment is 81. I don't know what ADR was there, but the distance there is 800. So that's 10 ADR. Yeah. So this pushed up 10 ADR. So if you got in at 5 or 6 ADR, you would have scaled in to a 5 trade position and got out. However, let's say, for example, that was 6 ADR and you got in with your first trade there, second trade there, and you didn't get to a target. This thing would then go sideways and then do another one. This is where, it's just, it doesn't matter what indicator you use, you are going to get occasionally squeezes in position trading, which you can't get out of. That's when you take your losses. You have to. So that is an instance where you would have got an accumulation off the back of a squeeze, a rally, and then a second one. Yes, you'd have got out on it. So if you'd have got in there and held that, you're out, no problem. But you probably wouldn't have, would you? So there was the occasional instance where we got that extension to 5 or 6 ADR, and it got you out. You definitely had a break even on it. Always, I don't think there was any instance where you didn't have a break even on it, at least. But there were instances where it didn't hit a target and it didn't move 1.5 ADR into target. Therefore, the trading stop didn't trigger, and then it made losses. So there is no, there's no system or strategy out there that works all the time. It just doesn't exist. This is why everyone's searching for the holy grail for the rest of their life, because there is no such thing. There is no strategy that works all the time. There isn't. It just doesn't exist. So, you've always got a point of failure in every strategy, regardless of what that strategy is doing and how it's trading. Which is why I kind of looked at this from a stop loss perspective initially, because we are getting so extended it's almost like trading. You're trading the daily chart in essence. Yeah. It's like trading, like the 5-day push on the daily chart and then starting to short it. It's Larry Williams. Yeah. It's Larry Williams' S&P strategy, trading the 3 RSI, that sort of thing. Yeah. If we move down 3 days, I'm going to buy it. If we carry on going down, I'm just going to keep buying it because stocks go up. It's the same principle, but FX doesn't work that way, does it? So, in fact, it would probably be an incredibly good strategy for the S&P 500. Might test that actually. Yeah. Could be a good strategy for the pension fund. Yeah, exactly. That's what I'm kind of, because my S&P strategy isn't working at the moment. Well, it's not turned on. I haven't had it turned on for years. So I had a pension fund strategy, which is published on the blog, which is the S&P on the S&P 500. Actually, it's not plugged. It's basically this strategy, the trend pullback, but it's obviously long only on the S&P. I was trading it for years, working absolutely beautifully. Exactly. It's just what, all the big investors do. They wait for pullbacks and they buy stocks, but you buy an index because you've got 500 of them all going in your direction, or 100, or however many is in the index. So the problem with this particular strategy with ADR is you don't pull back much in indices. If you look at a 24 and a 72, I haven't got a market open at the moment. If you look at a 24 and a 72 moving average on an S&P 500 chart, when we are in a bull market, it's like printing money. Every time you get near that 24, you just buy it. If it doesn't bounce off the 24, it will bounce off the 72. You get the odd blip, like 2008, where you get housing crisis and all sorts of stuff going on, and it might dip a little bit further and you go into temporary bear market. It's such a short amount of time. And, that's what the investors do, isn't it? Just buy it. UJ sweeping the highs for the last 2 months on the 12-month chart. Oh, yes. I haven't got a 12-month chart. So this is a 12-month chart, year by year. So obviously 2022, 2023. We are testing the 2024 highs, which you can kind of see, on my chart on the daily. Yeah. 2023, 2024, 2022, 2023. Now. Off. That's at 153. So this other line, this purple line I've got on here, that's the next big round number. So we got roughly 3/4 of an ADR to go until we hit the next big round number. So, what are the vast majority of breakouts? False breakouts. We will see. To be continued tomorrow. Exciting stuff. Yeah, way above where I was expecting that to get to today. Still nothing from the BOJ. I'm very disappointed in them. Chances of a Bank of Canada June cut reduced to roughly 40% from 70%. So just under 50% probability now of a June cut in the BOC, which is better than the US dollar. So we'll wait and see. Interesting. Awanda extended its spread to a full ADR yesterday during New Zealand dollar news. Yeah. This is what people don't understand about. Well, they do understand about trading, but I mean, brokers are not your friend. Their job is to basically get you to press buttons, as you know. Yeah, every time you press a button, you pay a spread, a commission, and a swap, depending on how long you're holding those for and what type of account you've got. But there's always a payment involved in a button press. So their only job is to stop you out, because when you stop out, you press the button again. So that's why you get high spreads around news. They'll tell you it's because they can't fill your order because the market has spread and there's no liquidity available and blah, 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 blah. Oh, 90% of the time they're taking the opposite side of your trade and it doesn't even go out to the dark pools. So it's utter rubbish. The whole lot's rubbish. They are spreading you because you've got a stop loss there. Or if you haven't, your mate has and they need it. So this is why position trading works. We don't get stopped out. And the market will move up and down as much as it likes and take everybody's money. And we just sit there and wait for it to come back the other way. However, when you get days like today, you have to take hits. And I can guarantee you, now that I've taken these two losses, that will come down. Because as soon as you take a loss, market reverses like clockwork. Right, I said I was going to leave it there about an hour ago. So I am going to leave it there now. I'll be back tomorrow afternoon. So tomorrow's live room is going to be for the euro interest rate at 1 o'clock. So tomorrow we have at 1:15 the euro rate at 450. Forecast to be 450, which is what we're going to get. Very surprised if we didn't. However, euro is a lot closer to reducing interest rates from an interest perspective than anybody else, an inflation perspective. So they're at 2.6, coming down fast. So be an interesting one tomorrow. And obviously we're going to need to see what Lagarde's take on it is. So press conference 1:45, that's where we're going to get the majority of the movement. So we've got that coming out tomorrow. So I'll be on at 1 o'clock. We'll watch what happens with the rates. In between the rates and the press conference, we've got the unemployment claims and PPI numbers. Again, they could all come out as negatives, which means we just undo exactly what we've got there today. But again, we'll wait and see. And tonight, obviously, press conference at 7. So not press conference, the FOMC meeting minutes. It's not a press conference, so it may not move the market particularly hard, but we'll see. So there's plenty of news to come tomorrow, and then Friday's a dead duck. So obviously we've had a big shake-up today, and we've now got the Japanese on the back foot. So we need to see what they're going to do with this. I'll be taking another position on this if we get any bear moves today. So my next short entry trigger is there. We're up here. So I'm an ADR away from where I typically would get in. So I'll be getting in short on the next move. Obviously getting that average up. But the whole play here is an intervention play. So if we don't get the intervention, it's going to turn into a loss. But you can see by euro yen, the Swiss yen, the pound yen, the Aussie yen, all the other yens, that yen is powering up. It's just that this US dollar is powering up way more. And if they cannot hold this at bay, the next move for them is to press the button. So we will see. But it will just happen. Blink of an eye, you'll suddenly go, where's that gone? May happen today, it may happen tomorrow, it may not happen at all. Wait and see. Heard you mentioning adding a strategy to the PTEA if viable. That's how the MREA was born. Yeah, I know that is true. But I'm not adding functionality. I'm literally adding a condition, which is about, by adding a condition to the strategy, to the EA, it's literally adding an input for true and false and adding about 4 or 5 lines of code. Yeah. Adding new functionality to do more stuff in the same way, which is what the position trader, the market reversal at CA turned into, is a different thing. So, but I'm not going to add anything to it if it's not warranted. Yeah, if I'm not going to, my rule is this time round, if I'm not going to use it, I'm not going to add it. If I don't see a benefit in it, I'm not going in. So, yeah, but if there's an edge there. It might be that I just build a very small little EA and chuck it out there and use that instead. I haven't backtested it as a position trading strategy. It's only been backtested as a stop loss strategy, and it works. So as you know, anything that works with a stop loss is very rare. anything that's mediocre with a stop loss, if you remove the stop loss and turn it into a position trading strategy, which is what position trading EA is for, is fantastic. So, yeah, it's got a lot of potential for position trading, but I need to test it. So I will, that's on my list to do, but I've got some work to do on it yet. More research. And also I want to test the Bollinger Bands and stuff and see how viable that would be as a replacement, because there's no point in reinventing the wheel. If the ADR extensions match very similar a Bollinger Band that I can use, I'm just going to use a Bollinger Band because it's much easier. So we'll see. Anyway, I'll be working on that over the next week or so. Right, so I'll be back tomorrow. Anything you need, let me know. I'll be on at 1 o'clock for the Euro. But I'll be in Telegram and Discord until then. So other than that, enjoy and yeah, keep your eyes peeled on this. Right, have a good day and I will see you guys tomorrow.